Here's where things get wild.
You couldn't give me the best office building in San Francisco right now. No way in hell would I touch that.
This is precisely because of its shadow banks.
Let's play a game. Take a shot every time he says shadow banking. My name is Tyler Cobble. I'm a commercial real estate investor in Nashville, Tennessee. I've been doing this since 2013 in various aspects of the industry. And while I haven't experienced a crash like 2008, most of us haven't. And I want to go into what is actually going on in the commercial real estate market today and give you a little bit of my commentary so that you don't just think this is the end of commercial real estate as an investment asset or vehicle altogether.
Which sector will be the catalyst for the next global financial crisis? The recent stress in the banking sector has put the spotlight on commercial real estate, and it appears that this sector is about to implode, even if central banks start cutting interest rates.
So he's not wrong there. I mean, commercial real estate banks are pulling back. That's because we had an interest rate hike due to the amount of inflation that we had going on in the country after all of the post-pandemic incentives that were given out by the federal government. When you print money, inflation goes up, which means interest rates have to rise to kind of curb what is going on in the market. So banks are pulling back, but that doesn't necessarily mean that we're about to see this crazy implosion in the market.
As a rule of thumb, multifamily rentals are the safest kind of commercial real estate. This is simply because multifamily rentals, like condos, are analogous to residential real estate like apartments. There is always someone looking for somewhere to live, hence why both tend to be safe investments.
I would actually argue that multifamily is not always the most secure commercial real estate asset. Everybody thinks it is because you gotta live somewhere, but let's be honest, if rent gets too expensive, like kind of what we've started to see in the market over the last few years, I mean, Nashville rents have just skyrocketed, people are gonna move back home. Yes, multifamily is often more secure than other commercial real estate assets, but your random person that's going to be renting a room from you doesn't have better credit than Walgreens.
What's annoying is that most articles and reports about commercial real estate don't make this distinction, and I've only seen a few which analyze each type of commercial real estate individually.
I do actually love that point because he's making a very factual statement. Whenever the media or these other groups start lumping everything together as commercial real estate and saying commercial real estate is dying, it's just not the case. It's like I said earlier with office space. Is office space dying? You couldn't give me the best office building in San Francisco right now. No way in hell would I touch that with a 10-foot pole. But would I buy office space in Nashville, Tennessee, or Denver, Raleigh, Austin, Dallas, Texas? Absolutely, because they are still getting a lot of corporate relocations there. So you really have to qualify what you are saying when you say commercial real estate is crashing.
According to Morgan Stanley, roughly $1.5 trillion of the $5.5 trillion of commercial real estate loans will be refinanced at a higher interest rate over the next year or so. However, you'll recall that not all commercial real estate is created equal, and not all this debt is at risk of blowing up. As you can see, around $2 trillion of this $5.5 trillion of debt is related to multifamily, with the US government holding almost 50%.
Before he goes any further, I'm going to make a prediction. He's about to say that multifamily, which he said earlier in the video, and a lot of investors would agree is the safest asset class, is about to be the one that blows up. And I'll tell you exactly why. Because over the last 10 years, everyone and their grandmother has been buying apartment complexes. And whenever I see that start to happen in the market, I'm getting as far away from that as possible, because that's when people start spending money that they shouldn't be spending on these buildings. Historically, commercial real estate appreciates 3% annually. So if we see 10% year over year for a few years, you can almost bet that there's going to be a correction that brings it back down to hit those historical averages.
Now, obviously, it's that $3.5 trillion of debt that's causing concerns. This is precisely because of its exposure to banks and so-called shadow banks. In a recent episode of Blockworks, expert real estate investor Nick Halaris recounted the rollercoaster that commercial real estate experienced during the pandemic. Like many other asset classes, the sector initially looked like it was about to get wrecked, but it quickly recovered and went on to hit all-time highs. This makes sense considering that commercial real estate investors of all kinds were able to refinance their debts at much lower interest rates. Nick estimates that the peak in commercial real estate was sometime in early 2022.
I actually think that's probably true. If you look at what happened in the pandemic, I mean, I was there. I was sitting in my office 100% of the time, had nothing else to do, which is why I ended up starting this channel, because no one wanted to buy commercial real estate. They didn't even want to think about it. But then June hit, and it seemed like everybody just took off, hit the ground running. We were busier than we have ever been. It has to do with interest rates, right? Everybody's refinancing properties. They're able to buy properties at a much lower cost of capital because their debt was so cheap, but also because everyone was so afraid of the 1031 exchange going away and opportunity zone benefits ending. So everybody was quickly selling out of the stock market and buying a bunch of real estate to, hopefully in 10 years, wipe away their capital gains tax. So we saw more transactions that year than I have ever seen in my career.
So this begs the question of what will happen when the riskier kinds of commercial real estate get wrecked. The short answer is nobody knows, because it's not entirely clear exactly who is exposed to what. Now, according to S&P Global, Wells Fargo is the largest office space lender. If my calculations are correct, this brings the unaccounted office space debt down to 40%. This makes me wonder if Wells Fargo is the unnamed bank with over $1 trillion in assets that's at risk of going under, according to a recent banking report. Who is holding the remaining 40% of office space debt? Well, in short, it's the so-called shadow banks.
Very ominous. Shadow banks. What's that organization that Beyonce and Jay-Z are supposed to be a part of?
The Illuminati.
The Illuminati. The Illuminati has all of the bank debt.
These include hedge funds, private investment firms, and even some cryptocurrency exchanges.
If I had a loan with a cryptocurrency exchange, I'd be losing my mind right now, especially after what has happened in the past few years with crypto. I'd be so absolutely worried about that. Yeah, refinance that.
Like small and medium-sized banks, shadow banks became popular sources of funding after the 2008 financial crisis, and they've been heavily involved in commercial real estate. The largest private real estate investment firm is Blackstone, which was buying single-family homes during the pandemic.
Blackstone is basically the James Bond villain of the real world. We've done a whole bunch of videos on build-to-rent and single-family rental portfolios. Check this one out here where I dive into the dark side of build-to-rent. If Blackstone starts to struggle because of what they've been doing, it's a good thing for the American economy, in my opinion. No one with that much money should be buying up that many single-family homes because it just skews the market and it takes away the American dream from your average person. You'll never be able to compete with institutional capital when you're buying a home. You just can't. Yeah, I'm just waiting for my door to get kicked down.
What if I told you that you could very well be the bag holder in this equation?
This is the most frustrating part about how the American economy works, because we are as capitalist as can be when it comes to banks making profit, taking risky decisions, and it paying off. But when it comes to banks taking risky decisions and losing their shirt because they actually don't know what they're doing, the American taxpayer gets caught with that bill because we just come in and bail them out. I mean, if you defaulted on your mortgage, the government's not going to come in and bail you out. They don't care. They just let you get foreclosed on. But Blackstone or one of these other big banks do it, and they're like, here's a check. Sorry that you did that. Do better next time.
James Davalos and Shalom Jacobs unpacked the relationship between the shadow banking sector.
I cannot take that seriously. Shadow banking sector.
Here's where things get wild. If a commercial real estate borrower defaults on a loan, they only lose the property. They don't owe the difference if the property went down in value. Meanwhile, the issuer of the loan takes ownership of the property and swallows the loss, if any. The fact that we're likely to see more commercial real estate loans up for auction means that these properties will soon sell for pennies on the dollar. Shalom believes this will be a generational buying opportunity.
That's exactly what I was going to say. Whenever you see a crisis like this, never let a good crisis go to waste. There are going to be some massive buying opportunities where you can get these office buildings that are in pretty good locations and probably in great condition for pennies on the dollar, right? Everybody's just saying, oh, take the office building and just convert it into apartments. It's not that easy because the floor plates, the mechanical, electrical, plumbing layouts, they just don't really collaborate well or jive well with what is going to be going on. But if you're getting it cheap enough, you can justify those expenses, which makes it potentially a pretty good investment.
This would cause the price of the related commercial real estate to crash, which could cause issues in the shadow banking sector.
We don't want any issues in the shadow banking sector. Let's play a game. Take a shot every time he says shadow banking.
In sum then, if interest rates don't come down soon, then the commercial real estate sector will crash. The outcome will be an increase in the supply of housing, which will bring costs down and possibly result in a housing dystopia.
This video should be renamed like, holy shit, office space is dead, don't buy it, run as fast as you can. You know, look, it's another sensationalized video topic where people are talking about commercial real estate crash, everybody's gonna die. Commercial real estate, if it crashes, it's gonna be a correction. It's not gonna just go back to the Stone Ages. If it does, we've got bigger things to worry about. So don't worry, buy right, do your due diligence, and keep investing. I'm gonna go pull all of my cash out and invest in the shadow banks.